Is your rental property underperforming and should you consider selling it? That's what we're going to be talking about today. And even as property managers, we're always thinking through what's best for our client, whether it's we manage it for 6 months or 10 years. At the end of the day, your investment needs to make sense for you, your risk tolerance, your sort of goals. So it's pretty similar just to like if you had a stock portfolio sort of, or the wealth manager sort of deciding when to buy or sell different assets. It needs to be something that you're constantly thinking about with your rental properties. It may not be as frequent, but it should be at least a few times a year that you're looking at your total opportunity cost of the equity that you have in the property and if that could be better used somewhere else. So, in Tampa Bay market right now, there's been some rent softening decline and it may be a little bit tougher time to sell. A lot of our single family owners have bought in the last 5 years. They may have a great interest rate and they may not want to let that go. So a lot of the single family clients that we see right now have been sort of just holding on to these as rentals, even if they are, break even or possibly at a little bit of a loss. And of course, that depends on how much money you put down. When it comes to our more strategic investors that might be buying assets to rent out, duplexes or multifamily or even just a house, but it's more of an investment decision. And it really just depends on a few factors, and that's what we're going to walk you through today. One is, at least once or twice a year, you need to be analyzing the performance of the property and deciding if it's still the best fit. So it could be something as simple as getting rid of that property and upgrading into something bigger or something in a better area or better construction style. So it could be, going from wood to a construction. It could be, trading up from a single family to a duplex where you have sort of two tenants, two sources of income, a little bit more diversified on the risk. Or it might be something where you just need to reinvest in a different area in the United States that you have experience in. Maybe you lived somewhere else before where the market might be a little bit better on the timing or where your money might go further and the returns a little bit better. So of course we love Tampa Bay, but it's not always going to be the best time to invest. And so that's something that you just have to constantly analyze. That's something that we help you do through all the financials that we provide, but also just our strategic calls that we'll have with the owners where we can do a little bit more of a deep dive and taking a look at, okay, how has it performed? But if you had to go buy a new property and let's say you just put 20% down with the interest rate market, taxes and insurance, can you redeploy that money for a better return, or even if it's the same return, but on a better property? So it may not be the right time where that sort of shift makes sense and you just got to sort of stay put. But it does depend on your overall strategy, timeline for different things that you're looking for, and obviously tax implications too. How long have you held the property? Maybe you want to hold it a little bit longer to sort of, not have as much taxes on the sale. And if you own the property free and clear and you're just sort of tired of owning it, you could certainly sell or finance it to another investor and you just become the bank. So can be a couple of different exit strategies. Obviously, you could sell your property in 1031 into something bigger and defer your taxes. So that's also something where even if the returns are maybe slightly less on a new deal, but you're able to get into a bigger property, better property, and roll some of those proceeds without the tax implications, that could be a great thing as well. So it's something that you should be proactively thinking about throughout the life of your investment and just deciding if it's the right time to shift gears. It could also be related to the strategy. So, maybe you've had a property that's been short-term rental and furnished and the market was great for that. Maybe for your property at one point, maybe it's competition has gotten harder and you just need to think about changing strategies to a long-term unfurnished rental. That's something that we always encourage owners to think about when they're buying a property is like, what's your plan B? So if you're flipping a property, your plan B should be, if I get stuck with this flip and the value's coming low and I need to rent it out for a year or two, am I going to be able to cover the mortgage? Same thing with long-term rental. If it doesn't work out, could short-term rental work? Or if I just need to sell it, do I have the equity? Or if it's a furnished, do I need to sell it or go unfurnished, long-term? So always should have a plan B when you're thinking about this stuff. And again, taking into account local market economics on right now, we're seeing some price compression, both on the rental side, but sales, right? So if somebody, it probably would have been a little bit better to sort of exit a few years ago on something that you had, but right now it's probably going to be tough. So we've seen a lot of appraisals coming in a little bit lower than people are expecting. So it could just be a difficult time to sell. But if you have to, it may be just, hopefully you make money, but even if you're taking a little bit of a loss, but you just need to get out now and get into something better. There's also an emotional side to real estate. So we've had owners where, it's whether it's been problem tenants or property maintenance that's just really kind of gotten them discouraged. Sometimes you just need a clean mental slate and to get into a new property, different property is something so there's some addresses at some point where you never want to hear about them again. And so we also understand that it may not be all financially motivated. There could be other benefits to upgrading a property. We talked about some of the tax advantages and just making sure, it's really a business decision. Sometimes people get tied to a certain location or potential upside on future development, and that's all great. But I think a lot of times that stuff moves a lot slower than people anticipate. But again, it's your sort of personal strategy. There's some people where if they can just make a couple $100 a month and they're just, buying one property in, a year, or as they move, they keep their old houses as rental properties. And maybe it's not a great, sort of investment, but for veterans, as an example, you're not putting any money down. So as you move around, you can accumulate some properties. But it might just be something that you're looking to, build a portfolio to pass down to, your kids or whatever. And so the motivations could be different on knowing that, you have some money tied up. The other thing would be that you can tap into potential equity that you have. So obviously you could refinance and just, assume a new interest rate. And because it's, there's some drops that might be happening over the next 12 months, that could be something to keep an eye on. I would say it's a rough rule of thumb. If it's going to drop a full point, that might be something to consider. Savings or making sure that the points you pay on the refinance are going to make sense at a large enough drop where you see that sort of decrease in the monthly payment. But the other thing could be just a HELOC. There are companies that do a line of credit against investment property, which could give you a chance to just tap into some of the equity, maybe up to 80% or something of the value. And you could either use that to renovate the property, you could use that to buy a new one. So there's a couple things where if you just don't want to sell right now, but you still want to be able to tap into some of the equity in the property, that's something that you can do. So we think it's a discussion that we'd love to have. We can help, clients sell. If they have an agent that referred them to us, we would refer it back to that agent to sell the property. We'll work with them, but we can utilize our brokerage side to sell property for you if it comes to that, and just help you guys sort of recycle your capital. Because if you have a property that's making 5%, let's say, yeah, there's some tax benefits that you sort of may calculate on top of that. But if you could simply lend that money out to somebody else for 10% with no real downside risk, and you just become the bank and you're not on the hook for any of the repairs, that could make sense as well. So you just have to kind of really analyze what's in the market. If you can make 4 or 5% at the bank and you can buy a rental for 8%, but you're going to have all the maintenance, the risk of the tenant not paying, like, does that really make sense? Maybe not. So it just, again, comes down to your personal preference. You want to make sure there's a significant sort of margin there over what you could get somewhere else to make sense for rental properties. So obviously we're big proponents of it, but there can be a time and a place, and we're happy to help you guys think through that.